Wednesday, everybody. How you doing there? Welcome to the Closing Beat, a quick stock market update show we do for our customers here at Jazz, as well as those of you that are interested in watching the show. Hey, we're also going to do a class tomorrow. It'll be at 8 p.m. It'll be live on YouTube, free, open to the public. Give you a sneak peek as to what do the wine and wealth classes look like for our customers. See, typically every Thursday we do a class for customers, and it's private. It's hidden in what we call the dojo. It's a video library. I've shown it numerous times, but tomorrow's class will actually be live to the public. So if you want to kind of see what it's all about, how we teach our customers, we're going to do a class on market decline statistics and show some of the geeky data that I know you guys like. So I hope you'll join us for that. We're also playing a game called Guess the Dow. Feel free to go to jazzwealth.com/guess the Dow. Take your pick. Where do you think the Dow is going to close next week? If you're the closest without going over, we'll send you a $100 gift card. If you're not one of our customers, we'll credit your account $100 if you happen to be a customer. That's all I have for homework today. Let's get started with the markets. Did you see? So you got 29 points on the Dow, 9 on the S&P. That's 0.29%. And the NASDAQ closed up 37 points. It was Fed day today, most unanticipated Fed day I've ever seen. Nobody really cared. We all had the same expectations, and the Fed delivered those expectations that we all had. More importantly, the market behaved exactly how it's supposed to behave given the stats that we shared with you yesterday. Those of you that make fun of those stats, man, I'm telling you, put the odds in your favor. It's a cool thing. We'll cover that here in just a moment. Let's take a look at the S&P. You've got it sitting near highs, and I'll maintain the same comments. We need a catalyst, and that catalyst is very clearly going to be trade comments because we had Fed, we had some earnings. We've also got trade floating out there. The markets did exactly what they were supposed to do statistically today, and I'll cover that in a second, but they did nothing extra, which means we're all waiting for news on the trade news there. There was really no update in terms of whether there would be a delay to tariffs this Sunday or not, and so we'll see what happens. But here you go. You got the market sitting at highs saying now Fed's out of the way, earnings are mostly out of the way besides some retailers. Give us some trade news. That'd be a reason people would be excited. Of course, good trade news would be what people are looking for there. So you got the NASDAQ doing the same thing, just sitting near highs. Tech stocks also sitting near highs, looking pretty strong still, but there's the NASDAQ for you. And then if we go over to the Dow, also sitting near highs, waiting for that catalyst. And now we know exactly what that catalyst is. So today was a little bit of a lifting of the sheets, if you will, to kind of see exactly what traders and investors are looking for to push the market towards all-time highs. Now, the trade news, basically where it's at, is the U.S. says would only consider delaying tariffs if China agrees to a very strict agriculture purchase, a very large one, by the way, but a strict sort of timeline for buying agricultural products from us, soybeans, etc. And look, this is a really small negotiating point. So another sort of thing that you got to see today was if we're really stuck on that, the U.S. and China are really stuck on that, then there's absolutely no probability of them having a full trade deal before the election. That was pretty much uncovered today as well. So that's what you have. It's just really, we're all waiting on trade news. So set your Google alerts to China trade or U.S. trade, and we'll just see what happens there. So because of that, there's where you have the markets here today. Now, I did something to kind of show you today. We've had a little extra time to play with some of the geeky stats out there, getting a little faster how we prepare these things. So I want to share something with you. If you happen to be really concerned about the trade sort of war that's going on there, and you're concerned about your investments, what we did is we broke down all the companies in the S&P 500 by sector, and then we want to show you which sector has the most exposure to trade. So I'll go ahead and pull up the little sheet that I prepared for you here. That's right, I made that. Huh? Not too shabby. Here is the S&P 500 broken down by sector, and this is the international exposure of each company, meaning the percentage of revenues that these companies get from outside the U.S. So starting at the top, real estate is the least exposed to this trade war sort of issue, if that's something that you're really concerned about. Utilities come in a close second for being the least exposed there. You work your way all the way down, you can see the different sectors here, financial, energy, etc. Materials having the biggest overall exposure to the Chinese trade war at 47.8%. 46.8% is your tech stocks. That's surprisingly second, in my opinion. You know that a lot of that stuff comes from China, etc. So they have the most exposure. Consumer staples, industrials, and healthcare round out the top part of the list. The S&P itself, if you're an index fund investor or have a large exposure to the S&P, about a quarter of it is exposed to international revenues there. And so about a quarter of your portfolio, if you are an S&P index fund investor, would be more at risk for volatility if this trade war thing becomes a little bit more chaotic. If you're interested in individual stocks, I'll give you a handful of them here with a lot of exposure overseas. You got Qualcomm gets 97.3% of their revenues from overseas versus the U.S. Newmont Mining, although that's a gold mining stock, that's kind of expected. Lam Research in the tech space, 92.6. Jabil Circuit, you see all these tech stocks in there, 91.7. Marvell Technology, 91.2. Applied Materials, these are all semiconductors, 91.1. Cypress Semiconductors, 90%. NXP Semiconductors, 90%. Also starting to try to give you the hint there that if you're a semiconductor-related investor, of course, those are sitting near highs. We'll cover that in a second, but you got a lot of exposure to that. Include in the mix there over 80% exposure to international revenues, Micron Technologies, KLA-10 Core, Maxim Integrated MXIM, NVIDIA is just one, Texas Instruments. Those all rank out at the top of the list with a lot of them being exposed to some of this. So just wanted to share something different with you. I'm trying to give you guys different things to look at while the market is sort of quiet and waiting for that catalyst that we talked about. So let's go down to our sector breakdown here and talk about the different areas of the market. Semiconductors had the best day today. Overall, broke out new highs. It was your best performing area of the market, up 2.1% there. Number of upgrades in this area, in this space, and there were a number of great performing stocks in the area as well. So the semiconductors lead the way. There's a couple stocks, sectors that are hinting at little breakouts. Retail, we talked about this over the last few days, sitting at those highs, going to need a bit of a catalyst today. It was down today. There was some retail earnings between, not earnings, but retail news came out. Home Depot, Children's Place, American Eagle Outfitter. You got Lululemon tomorrow. So not quite ready to break out if you're hoping that retail is going to break out, but it's hinting at it. Also, regional banks hinting at this breakout. We've talked about this as well. Going to need a catalyst of some kind. Drew the line yesterday just to kind of show you that ceiling above that everybody's waiting for. Those are your regional banks. If we look at the price of oil, a little bit lower on the day, and it was kind of a volatile day for oil. Every Wednesday, unless Monday is market holiday, you have your crude oil inventory numbers that come out here in the U.S. Whoever analyzes these is always way, way off. Last week was a great example with the number of the increase in barrels there. This week we expected a 2.8 million barrel drop in supplies, and you actually got an increase of about 880,000 barrels. With that comes lower prices in oil. It doesn't really matter. Oil's kind of stuck in this range here. If it pulled back a little bit, you'd expect to find a little support back here just under the 200-day moving average. So the price of oil stood out as one of the more volatile areas today. Not really a sector one here, but we talked about Mexico yesterday. The USMCA trade deal going, or at least being agreed upon yesterday. Today there's a little carryover from that. People that read headlines yesterday got excited, wanted to participate, did their research, said, hey, how do I participate? They found EWW, and so that got a little boost today. This is some of the Mexican large cap stocks, I do believe. Everything else is just kind of in a position waiting for a little catalyst here. You've got CHOP here in the home building area of the market. These are also home suppliers as well, the XHB. So chopping around, sitting at highs there. You got tech also doing the same, kind of feeling like it wants to do what the semiconductors are doing and break out. Just nothing there in the short term. So if you're ultra short-term investor, you're probably looking at other areas of the market. Materials sitting at highs. Remember, they have the biggest exposure to international revenues there, so that's a concern. Industrials also just sort of chopping around, and then retail, we've already pointed out, chopping around at those highs. So that's basically the sector overview for the day. There's a lot of question marks as you look around the different sectors of the market. Also, real quick, posted a video today about baby boomers rebalancing their portfolios. And I put on the title, okay, boomers, time to rebalance. And I realized that's a phrase that's out there right now. My daughter's been saying it over and over, and I have no idea what she's talking about. And so I told her I was going to post this video, and I'm like, is that like derogatory or something? And she's like, I wouldn't don't put that on there. She's like, you know, that's just us kids making fun of the old people. And I said, well, I'm not going to make fun of people. You know, I want to sort of target the baby boomers. And she sort of just swore up and down. She's like, don't post it, don't do it. I didn't know. I didn't know. I just, you know, hey, okay, boomers. So obviously I didn't mean anything insulting, just trying to grab your attention. You really, really want to look at rebalancing, by the way. Fidelity put out the study. They were the ones that initially gave you that information. And I think they're right. I really think that it's something you need to look at in your, especially if you have larger 401ks, larger IRAs and things. It's well worth the effort. If you take a moment, just go in there and rebalance. So if you're not sure what I'm talking about, go see the video. We walk through the whole idea of, in today's video, of what rebalancing and everything means. And of course, I'm sorry if I offended anybody. So, oh man. There you go. Let's go on here. A couple stocks in the news today. Well, quite a few stocks in the news. You got Dropbox hitting new lows, 3% down on the day. They're losing their chief customer officer. I haven't heard that in a long time. Chief customer officer is leaving. Apparently they were sort of a big deal there. The stock was a little bit lower, down 3%. Some of the retail names we mentioned, Home Depot hitting the 200-day moving average. Don't like to see that. Kind of want to see it bounce in this area here if you're an investor or playing for a bounce in Home Depot. They had their investor day today. Wells Fargo obviously got it a little bit wrong because Wells Fargo said that they were buyers into the investor day. So I don't know, a little bit off at the moment. They said that they see their sales growth between 3.5% and 4% going forward. Analysts had expected 4.3 or 4.5, somewhere in there. So it was a little bit of a disappointment in Home Depot, so that hurt some of your retailers. Children's Place, hopefully you don't own this one. The stock was lower on the day. Let me see, do I have my sheet here? Children's Place beat on earnings by a penny, lowered guidance, weaker than expected revenues and everything. They're actually doing well with their app. So if you happen to look online and you shop at the Children's Place, that's like 36% of their revenue or something at the moment. So it's getting better. It just wasn't good enough. So the stock was down 23%. American Eagle Outfitters also hitting new lows. No, it didn't quite hit new lows. Did gap down today, lost 6.5%, closed off of its lows, but that was also earnings related. Earnings were basically as expected. They lowered guidance going forward. They're working on some things there. It's kind of an interesting study if you want to read about it, but today, lower. UPS lower by 1.5% on the day. They were downgraded at BMO Capital, I believe, one of the bigger analysts on UPS there. They have an issue with their profitability and free cash flow going forward. They say it's going to be tough for their profitability to stay where it's at. And so, you know, they are one of the more vocal analysts on UPS. So the stock was down 1.5%. The power of one person. That's impressive, right? To get people to follow. What do we got here? Dave & Buster's, which is interesting to me because I've tried to go to Dave & Buster's numerous times now, and they are always so busy that I just leave. Maybe that's the case for a lot of people because their earnings came in today. Earnings were basically as expected. Everything was basically in line. The CEO pointed out competition. Said that they're seeing a little bit of softness due to competition, but I'll tell you, they've got at least a plan. They're calling it a turnaround plan. I don't know if we're there yet, but turnaround plan for Dave & Buster's. They're going to simplify their menu. Good job. I would agree there. If you happen to be at Dave & Buster's, try to figure out what's going on that menu. It's like the Cheesecake Factory. It's a little bit overdone. Not sure we need to offer all that, guys. So they're going to do that. They're going to revitalize the gaming area to include more social type games where people may get more engaged. They may stay longer, make friends, hang out, have a drink or two. So they're working on that. And they're also going to expand their mobile app, which is going well for them. If you happen to do research on Dave & Buster's, in November alone, they sold $14 million in digital cards that you can go use when you go there. That's a high for them. So they're doing well there. They're going to try to kind of increase that, get a little more growth in that avenue there. So I applaud it. While today wasn't good for them, it closed near the low end of the range. Not bad. I mean, you know, it's a tough business. I get it. But it seems like they're taking the right steps there. So that's all good there. Well, I'll go over one more. You had Netflix today, a little bit of a recovery from yesterday. Piper Jaffray, I believe, was the company that came out and sort of went in the opposite direction of yesterday's analysts that said they were going to lose a lot of subscribers. So the stock got a little bit of a bounce, looking pretty good there. There was also some news on Boeing. The stock ended up closing up off of its lows and went positive on the day, which is a good sign. The FAA is like trying to slow them down a little bit because Boeing in the news is moving forward as if like, hey, we're going to get this thing certified. It's going to be back in the air. Don't you worry. And the FAA is like, wait a minute, you're not calling the shots here. We are. And so they kind of put their foot out there today, closed exactly at $350 even. You got 67.9% of the S&P above the 50-day moving average. It was 67% yesterday, so a very tiny uptick there. I believe it was 7 different names there that moved above the 50-day moving average. You've got 26 new 52-week highs today. I'll point out a few. I don't want to make it seem like there's a lot moving on the plate out there, but Apple hit new highs. One of the tech names there. Just barely broke some new highs there. You got BMY, one of the ones that we own here, but it's starting to get weak. See how today there was a little bit more profit taking in there. So like I said yesterday, if this one pulls back, I'd have no fear in that at all. I think it's more than fine. I actually hope it pulls back. I don't like when stocks go too far too fast. It makes it very difficult in the short term and also increases the volatility if you've ever studied something like that. You've got MGM hinting at a little breakout here at highs. It tried to do it today. There just wasn't any real volume in there. But still hinting at a breakout there. Best Buy hitting new highs, getting back in the move. It's been choppy pretty much all year long. Lately, since the last earnings report, it started to kind of show at least the hint of a new uptrend there. Well, you could technically make the argument it's in an uptrend. I get that. But starting to really show some life there in Best Buy if you happen to own it. And Verizon. We don't look at this one often. We happen to own it in our dividend fund, of course, but we don't look at this often. It's been chopping around. This looks like a wide range, but it's really only a few dollars. But more importantly, it's moving back above these highs. So it's very, very similar. There we go. To the regional banks, although I know this is not a regional bank, but it's a very similar pattern in the sense that we all see the same highs, right? Everybody that's in there sees the highs, and today it just tried to get up there. I think maybe a little bit of a break before it ends up doing it, but Verizon looking strong there, and obviously a good, stable dividend payer that a lot of people like. The only new 52-week low today was Ventas. Was also a 52-week low yesterday, although it closed off of its lows. That is the definition of trying to catch a falling knife there. That is, look, it almost looks like a knife, doesn't it? See all that red? That's the blood. It's something to help you. Hey, let's go over this Fed news here because the stock market actually performed exactly as the stats we shared with you yesterday. The S&P performance, if you average all the Fed days, go back to 1994 when we first started tracking this stuff, to today. If you take every single Fed day, you take the S&P performance, add it all up, and average it out, you get 0.27%. The S&P gained 0.29% today, which is why I'm sort of hinting that, okay, the Fed wasn't the issue, that wasn't the catalyst, we all expected that. Earnings haven't been an issue, it's not really earnings season anyways, so trade now becomes the obvious focus, and I kind of feel like Washington knows that now. If we know that, they know that, right? So expect to see some trade headlines going into the end of the week. I mean, it's just right there. It's just so perfectly obvious at this point. We also gave you the stats on December Fed days, telling you it was exactly the same, 0.27%. And so stock market, again, 0.29%, just right there. You got to know these stats. That just shows you, again, it's another great example, how everyone else that's doing this knows those stats. They know what's supposed to happen and what's outside of the range of expectations. You got to know these things, too, if you're active or you're actively managing a portfolio, because it's just right there. I mean, I know some people put a little grief on some of these stats and say, well, you can't tell what's going to happen in the future. But if everybody is looking at those stats and setting expectations on that, right, we can't tell what's going to happen in the future. But if that's what everybody's focused on, aren't they going to behave as if that's going to happen? And today was a really, really good example for that. Okay. Let's move on here. We've got a couple stocks reporting earnings tomorrow. I looked up a few of them for you. You got Adobe. It was a little lower on the day. Adobe beats on earnings 89% of the time, beats on revenue 82% of the time. The day of following earnings, right, when they report earnings tomorrow in the afternoon, Friday it would be in this case, average performance is 61% positive on that day. So 61% chance that on Friday it's going to be positive. Now, Adobe has lowered their guidance the last 2 quarters. They have set the bar really, really low. The last 2 quarters, the stock was still higher even though they lowered guidance. So if they even report in line and beat on earnings, even by a penny, you'd expect to see this stock pop a little bit. I'm not telling you that's what's going to happen. You can kind of see they've lowered the bar, and the stock hasn't really performed all that bad. Last time they missed on earnings, which was last December, which this earnings report, but last December, the stock was down 3%. And so we did a little bit looking back to see how volatile does Adobe get. The last time it actually had a double-digit gap higher was 2002. The last time it had a double-digit gap lower, which was 21%, by the way, so it's nothing to laugh at, right? It's something to know. That was in 2010. They happened to actually beat on earnings and revenue in that case, so I'm not sure what happened back then. But that's Adobe. They got earnings coming up. I figured you guys probably also want to know about Costco. They're reporting earnings tomorrow at the same time as well. 7 of the last 10 earnings announcements, the stock has gapped down. You can see over this year, these earnings announcements, it really hasn't mattered. The stock recovered. Here's one right here where it recovered and then some. But 7 out of 10 times, the last 10 times, it has gapped down. Average gap down 4.1%. So it's a mover. You know, I mean, that's fair volatility right there. So if you happen to be looking at the stock or own it or something, you know to expect it's not going to just be a little 0.5% plus or minus. It'd be a good mover. If you look over the last 20 years, Costco has averaged a slight gap lower, minus 0.03% on this one. So a little bias to the downside there, but very, very little. You've also got Oracle, Lululemon, Ciena, and Broadcom reporting tomorrow as well. Let's wrap it up with some dividends. If you happen to own Crown Castle, CCI is a ticker symbol. It's $1.20 coming your way. NTRS, 70 cents. Domino's Pizza, 65 cents. Gilead Sciences, 63 cents. The NASDAQ, 47 cents. Macy's, 38 cents, although that's way too high. They should probably cut the dividend, start working on some of that online stuff there, in my opinion. And Fidelity International Services paying out 35 cents tomorrow. Okay, in the scroller below, we talked about Choice Hotels. That's going to be, here, I'll show you real quick. Choice Hotels, that's CHH is your ticker symbol. That one moved higher today. It's going to be taking the place of Plantronics, or Plantronics, I don't know how you say it, in the S&P 400. And then in the small cap 600 S&P, Plantronics is going, these guys are going to be taking over for Vitamin Shoppe, right? I always call it the Vitamin Shoppe. We got a lot of those around here, but so that's a little bit of a heads up on what's going on there, and I think that's about it. I'll take your questions if you happen to have any. See what I can do there. If you ask questions early, I can't actually see the questions like while I'm talking, but now I can. So if you have a question, I'm happy to help you there. You like the stats play moves? I'd love to give them to you. There's, like I said, there's just nothing out there of any meat. If you want one, I don't have the actual stats on it. Dollar General average performance from here is 2.12%, but it's about 58% of the time. I just didn't like that one. I know you shouldn't interject your opinion when you're looking up stats like this, but Dollar General's one. But yeah, the rest of them are just tiny, little 0.5% gains. That's a lot of risk to take for such a small reward. It'll come back though. There'll be more volatility, and when that happens, we can see. I love it. Lulu, did they report already? Come on. Was it after hours today? Did I read it wrong? I probably read it wrong. Yep, they did. Sure enough. I'm sorry about that. You caught me. They reported after hours, stock down about $10. Down about 223-ish. Yep. Okay, cross that one off our list. One less we have to look at there. Come on. If that's all I get wrong today, I'm good with that. Stitch Fix recovered from yesterday. Well, Stitch Fix had a good day yesterday, but also continued today, up another 5%. It gapped down on the day, but still a good day there for your Stitch Fix people. Chewy, you like Chewy? You think it's stuck at 30? Well, your first little line in the sand is about 28.50. It's your prior highs there. And remember, this is a little tough. These stocks are tough because you have people that bought the IPO, they bought all the excitement, and they're underwater. There's not many people that have a profit on this stock at the moment. And so as it makes its way up to known areas where it sold off before, you got to expect a little bit of hesitation there. And by hesitation, I mean people that say, well, I had a loss of X, and now my loss is slightly smaller than X. I'll take the loss and move on. So you're going to get that. It's not going to be a rocket ship higher, would be my personal opinion, but I guess you never know. Yep. You like Procter? Oh, I did it.
Hey,
did
wait!
You see what I did?
Before you go, watch one of.
I knew it. I knew it. See, you jinxed me. Procter & Gamble, straight uptrend there. You're looking for a breakout. Yeah, same thing. Need a catalyst here. You got to get people excited about the overall markets, broad markets, to cause more money to move into index and index funds, which would help Procter & Gamble. No reason to believe it's just going to, roll over and die at this point. I like it. I love it. Does Broadcom beat earning? I mean, I don't know if they will or not. I wish I would. I mean, if I knew that. Come on. Could you imagine? People always say, like, if you could have one secret, like, superpower, what would it be? And everybody's like, oh, I want to be able to, like, fly or something. That would be fun, but in my opinion, just let me see 15 minutes into the future. I don't need anything more than that. Just let me be able to see 15 minutes into the future. You know what I would do with that? Anyway, side topic there. They beat on earnings 100% of the time. They've got this game figured out, obviously. Let's go back and look here. If I look back since 2009, that's the furthest I can go back. They've beaten every single time on earnings. 71% of the time it's positive on earnings day. The average gap higher on Broadcom, AVGO is the symbol, if you're looking. Average gap higher, 2.75%. So not bad. Pretty good stats on that one. Odds of the tariffs taking effect this month as planned or postponed again. I kind of think they're going to postpone them. I just think it's very negative if they don't, because it's such a tiny, tiny little thing that the U.S. is focused on. And that just tells you if they can't make that happen to get through even phase 1, then, oh, I see what I did. Guys, yeah, man. If they can't even make that happen, this tiny little thing, then they're too far apart, right? It just means that it's going to be a long, drawn-out battle. So I'm sort of hoping they postpone them, even if it's a little bit of a give to the Chinese there. Obviously, I'm not in the room. I don't know what's going on, so I can't tell you. Dustin, I'm in the process of opening an account with you. Thank you. I love it. You don't want to just start putting into the Roth because you make too much money. Okay. Yeah. So if that's the case, let's talk about it first, right? We don't want you to get in trouble with the IRS. If we want to schedule a call on a website, I'll make a note to be the one to call you for sure. But if you're close or you feel like you're going to be close, there's no rush, right? And then we want to probably strategize going forward for the next couple of years. So happy to help. Yep. CoinFox just stumbled on the channel. I like it, man. Welcome. I love it. I love it. I love it. Yeah, gold miners higher today as a sector. GDX is one that you can look at there. Let me see if I can yank it back in here without messing everything up. Yep, a little bit higher there today. You've got gold moving higher on a lower dollar, so that helps, and it obviously helps the gold miners. I believe you had an earnings report or two in there from one. Nope, not that you might have had one outside, one of the smaller cap names or something might have reported earnings. Was it Newmont? I feel like maybe Newmont. That's your stronger one in the group there. So it could have been a little bit earnings related, but in general, you got a little spike in the price of gold that helps the gold miners. It's very much tightly correlated lately. I don't know if you follow correlations. I thought about doing a video on that, portfolio correlations. It might be a little bit one that doesn't get a lot of views, but I think it's interesting. Very tightly correlated, at least over the last 2 weeks, if that answers your question. You hope I'm right about the tariffs being postponed. I hope so too. I hope so as well. Yeah, Saudi Aramco IPO, successful IPO, by the way, largest IPO ever in the world. Something you want to read about there, pretty interesting. You like the studio? Nice. I like it too. Thanks. Wine and wealth topic. Yeah, so I'll wrap it up with that. If you're not doing anything, tomorrow night, 8 o'clock, of course, it'll be recorded and available on YouTube, but we're going to go live from the speakeasy over there, so grab a drink, no matter you're a customer or if you just like watching. Grab a drink, come hang out with us for a little bit. I think you'll enjoy it. We'll go over some stats, and I'll stick around as long as you guys like to answer questions, as well as help out customers as well. And our customers know that, of course, if I say anything that sparks a question, you guys just reach right out to me. I'm always happy to help. But with that in mind, I'll wrap it up. I appreciate you guys watching today, and the new people, welcome as well. I love it. And enjoy the rest of your day. We'll see you guys again tomorrow and then tomorrow night. So enjoy.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.